Yo, what's up? All right, check, check, check. 1, 2. Disclaimer: I'm not a professional trader and definitely not a financial advisor. The stream shows simulated trading in a prop firm environment, and it's only for educational and entertainment purposes. I don't know how entertaining it is, though. Basically, do your own fucking research, and if you're using real money in the markets, make sure you consult a professional who's qualified to help you make smarter decisions. Remember, trading is very risky and you can lose all your money, not just some money. All right, so back to our screen. We're going to open up NQ. All right, so holy shit. All right, so ET8 session. So this is our range for the overnight session so far. Let's open up another chart. All right, deep trades view. All right, so what this shows is essentially large aggregate trades that show up as bubbles. So this is a 1-minute candle starting at 1800. Let's find 1800 somewhere around here. So this is it right here. So this is where the evening session started. All right, so we'll make that a red line. And that's where it ended, or that's the high. So we'll draw a VWAP. From 1800 and a volume profile. Not what we want. Is that a VWAP? Okay, there we have it. So the VWAP and the point of control are right there. We're going to change the color. We're going to make that color right there. looks like we left value, come back into value towards the point of control of VWAP, then left again, made a higher high, wicked pretty hard at the top with no volume. All right, so here at the top, this entire range right here, no significantly large big trades. Now, let's see if there are still buyers here. And we did have some large orders, especially for an evening session. And this is NQ. All right, so interesting to say the least. We did build some value here, but it rejected. And if we take a Fibonacci that's a little modified on the profile, we were traced back down to nearly 50%, so back to the golden pocket before continuing back up, bouncing off the 30 twice. Let's see if we bounce a third time here. So we've had, I'm gonna change this color here. So we've had, this is where sellers got absorbed as well, right here at the 30. So this is where buyers are stepping in. So interestingly enough here, we retrace back to basically repair this inefficiency where there's lots of buying pressure to move the price up. This was at 11:29 Eastern time. So about it's 12:26 Eastern time now, about an hour ago. And we've created another just delete that out. This be easier because it's so damn small. We created another area here that has yet to be repaired. All right, and then we have another huge rejection from about 25,300. So those are a couple of areas. This is a little off. Let's make that right there. So 25,300 is about 50%. So if I do take a long, this is going to be my target right here. So we'll make that red dot dash dot, and we'll make it 3 just so it stands out. So that's where we're getting out. Now here at the bottom, we just rejected again off of this area, which is also the value area low for the overnight session. So we're going to open up an MNQ contract. So we bounced off 50%, this little zone that I drew out, right? Well, we can also basically just take the actual value area and we pretty much nearly bounced off the bottom of it, but we stayed above it. So we're going to get into a long, and we might take a little bit of heat here, but we have very specific Let's open up Legends. We're going to run this Legends up or lose it all. So this is an eval. It's a prop firm eval, simulated trading, not real money. Right now we're at 30%, and our entire move today, so far tonight, was 442 points. Excuse me, 110 points. 110 points. So there's definitely more room to the upside. Now, a couple areas of interest here. First thing is, you see here, we had a very strong area. Oh my God. With very little aggressive buying at the top, almost like a exhaustion. So I call this an exhaustion area. It could have been absorbed as well, but the aggressive, well, we did have aggressive buying right here on this line. So it's a pretty high delta green candle where a lot of aggressive buyers. So they actually got absorbed right here. So down here is another level where there was a lot of aggressive buying. Right, so we could still find our way to retrace deeper. All right, maybe to, if sellers aren't still at this location, looks like buyers came back in here. Looks like buyers protected here. So this is a big protection zone. So this 50% in the VWAP. We already bounced off the VWAP in the evening session one time. And if we draw a trend line, we're making higher highs. Something like that. All right, and if we go lower, it's pretty much respecting the trend line. That's from the New York session prior. So then we had this, we take this swing here, this really, that's our New York session. Actually, New York started. Let's do it from the start. We'll call that 9:30. We're going to close it out at 1600. So we P-shaped profile, we extended up, and we holding this value area around 25,250. We've been respecting this trend line all the way up. Coming back to New York session, the VWAP is essentially the point of control, of the New York session right here, which is also a high green delta candle and a high volume node, right? And 50% of the evening range. What a coincidence, right? What a coincidence. Then we created and broke out of the New York range, tried to extend higher before getting absorbed at the top and then losing steam before returning back to 30%. So we retraced, slowly worked our way up, or down first, to open, and then we came up to the top, And now we are in and above the value area high for the overnight session. And we're also still above value, testing the value area high from the New York session. So we dropped below it, extended up higher, dropped down even further, cleaning the lows, sweeping up any stops in liquidity before turning this resistance into support. I'm looking for a place to get in. Okay, so that's my read. There's momentum to the upside. Okay, so we're looking to get in. Innocent till proven guilty, or long until proven short. Let's just take a minute, and I'm gonna step away. We'll zoom in. We're gonna get into some short scalps. We're not looking for any big moves here. We're looking for 2-3 micro contracts. Zoom in a little bit. And I like that view. We can pretty much see everything here that we need to see. So we're extending back down to this trend line, which we haven't tapped since last night at around 8 p.m. Eastern time. We're also revisiting an area where sellers tried to step in and failed. So sellers initiated some effort to the downside, and responsive buyers stepped in to absorb it and push the price back up. So 68 contracts by one entity in the evening session is actually a fairly large aggregate order, considering most of the big trade stuff happens in the daytime. As you'll see, comparatively speaking, this is the night session. You can see, or evening session, you can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 big trade bubbles in the evening session. And those are aggregated by one entity. And if we look at New York, man, I'm not even gonna count them, right? There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 right here in power hour. All right, and then there's 10 here, there's a shit ton down here, there's a shit ton over here. So here's another big area, right? Eventually, if we ever get back down to here, we have this high volume node. Lots of aggressive selling. It just got absorbed. So this is going to be an area, all right, at the bottom, at the trend line again. All right, and buyers got absorbed here, pulled back, revisited the trend line, worked back up, and broke through the wall. So we broke through this wall right here, and got absorbed. Price got pushed back down, moved up to a higher level, got pushed back down after extending. Now we're stair stepping back down to the trend line, and this is where we enter. I'm going to buy 3. I'm going to put our stop loss Very tight. Oh, wait a minute. This is NQ. That's actually a mistake, y'all. This is supposed to be MNQ. So first mistake of the night after all that great analysis. Let's see if we get out of this unscathed. We may just like blow our whole wad right here. I really feel like we're going to hold this level, but I don't know. And three micro contracts or mini contracts is too many contracts to have open for my bankroll. So we're going to see if we can just like get out of here unscathed. Oop, that was almost it. So we took a little hit there. We're going to change the actual contract that we're trading on to MNQ. So we took a $40 hit there. That's fine. Going to re-enter for three contracts MNQ, but we are watching the NQ contract. And I believe we're going to come back to that level right there. It's kind of sad that we, oh, I guess we're okay. We're up 50 bucks on the session. So regardless, yeah, we're good. I think we were already up though earlier. Okay, so we're down 48 and we're up 50. So we're break even on the session. That was a $50 mistake though. Whatever, however you want to look at it. So always check contracts. Gonna size down and widen up during nighttime hours, electronic trading hours. And stop loss is gonna be behind that low right there. We'll probably even stop it up faster if we see enough momentum. But I think these buyers will, maybe it's below here. These buyers are going to try to protect. All right, so we had buyers step in down here. Could definitely retrace farther down, which is what we're seeing now. So we finally broke through that level. And I'm going to put it below this area of protection. So that's $100 of risk, and to take it back up to 25,300. And technically maybe below the swing low. So that's 121 to make 154. Okay, so a couple things that are interesting, right? I need to be very careful here. We broke back into value, so now we're retesting the value area again. We already broke through it one time, failed, and made a higher high. Now we're going to test it a second time. And if we bounce off of this trend line, start headed back down, we may be taking a short back down to the VWAP and then try to get back in long again. So it's just a little counter trend scalp. That's the first idea. But we're going to give buyers, here's one thing that I do see that I kind of like, is that we had a little, gonna just gonna kind of draw it out here. We had a very small imbalance right here. Also one right here. So we tapped into this first imbalance right here, broke through it, tapped into this imbalance right here, about 50%, and bounced off of it. Now this is our third 1 minute candle in a row where we see bullish momentum, and it's on a fairly steep incline. That being said, there's nothing that doesn't say that we're going to retrace all the way back down to the VWAP. Okay, so completely possible. Now we have a couple things to protect us. This high volume, high, I won't say high volume, high positive delta area where large players stepped in multiple times to protect. We've already protected there 2 times. We jumped above it, came back down. The actual protection was here. Okay. First here, then a little bit lower. And we came back down to retest again. These trend lines are not the gospel, but since we created a lower low, this trend line is now a little bit, it's got more touch points. We dropped below it, so a little bit of sideways action. Maybe we hang out in this range for a while, which looks to be where we're starting to build value. You can see this high concentration of volume all the way through. So this may be the range that we stay in for the most of the rest of the night. So I'm having mixed feelings now that I'm in the trade. That's normal though. Made lower high, lower low, lower low, lower low, lower low, lower high, lower high, lower high, lower high. Balance, distribute, go lower, come back up, balance, distribute, go lower, lower, lower. Ah, it's so hard, right? So hard. Trading is really hard. The good thing is that we got out of the NQ trade fairly unscathed. So the fact that we broke back into value, um, if we don't get a reaction at this level, I'm pretty much out. So we tapped into and through both of these zones twice. So to me, this feels like the bottom of the range right here. It's not perfect, it's a zone. We'll get rid of some shit that doesn't suit us. So what else is happening? Interestingly enough, this is kind of crazy. Okay, so this is an interesting thought. Are we losing momentum? Here's the thing that really gets me here. I see lots of evidence of large players slinging lots of contracts, right? So just for shits and giggles, right? We have $20 per point. Buyers who bought in at 25 to 60. Let's get rid of that. So the bought in here at 25 to 60 or so. Move 41.5 points. So 41, we'll call it 40 points. And it's $20 a point. That's 800. This is 800 times 113. It's $90,000. So not huge, but relevant. Okay, so we're seeing some strong wicking back down. So we could be in for another leg down. So my thought is that if something doesn't change within like the next 5 minutes or so, 5 candles, we're likely going to get out of this trade. So we had 1, 2, 3, 4, 5, 10, like 15, 18 candles. So 18 minutes of consolidation before a 5 minute down move. And we had another 10 minutes of consolidation. And then another 1 minute down move. Then about 5 minutes of consolidation. And then a 2 minute down move. Then some more consolidation. Now we're making an up move. So a little more promising now. But before we get too excited, it could just be retracing to this small range before rejecting and moving down farther for another leg. Now, if we draw some fibs on the standpoint of a downswing, we're likely to retrace back to this 50% right here, or this 70, which is 50% of this red zone asymmetry. So honestly, my target would be right here. And then maybe re-enter on a retracement, take another leg up. And my exit $60 of risk. This is on a 1-minute chart. Let's keep these levels, and I'm gonna change this to a 21 range, about half of what we do, like 40 range during the New York session. Let's look at 21 range. See how it coincides. So every 40 ticks creates a bar. What we can see is same pattern, lower low, lower high, all the way down. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So we already had 5 swings, usually 4 to 6. So if we get stopped out here, I would likely take another leg up on a retest of this 50% line, somewhere around here. So one of the questions is, well, it's really not moving my stop that much farther back. Why am I not doing it? Because I want to lose the least amount possible. And until it breaks this level, I'm playing the retracement back up to my target. So these buyers are still protecting. At least it looks that way. Like, this low volume node here with a high buying delta, this could be a good entry location. We'll make it green. Dot dot dash 3. So I like the 40 range chart as well. The structure is a little bit cleaner because each bar is 40 ticks of movement. So essentially they're all the same size. So this candle, for instance, right here, if I move it, it's going to be the same size as that candle and as that candle and that candle and that candle and that candle and this candle, etc. So the difference is the body size of each candle. So what we get are some very clear wicks, and this is an interesting candle because there's no wick on it at all. Okay, so I'm gonna blow your minds a little bit. Maybe not, but we're gonna. So you see how these candles are just purple and green at the moment. Well, we're gonna change them. So we'll do a couple different changes. First thing we're gonna do is make the price line so that we can see where price is a little bit better. So now you can see this dotted line. Now next, let's make it dotted. Now the next thing we can do is turn it into width-based candles. So the wider the candles are, the more volume was transacted in that candle. So you can see now some are wider than others. It helps you spot absorptions and candles that actually had effort attached to them. Okay, now we're going to do one more thing, and we're going to color them instead of just by green and purple, we're going to color them by delta. So if it was a positive delta candle, regardless of whether it closed up or down, it will be color based, and that makes it unhollowed, right? Okay, so now we're back outside of the value area. So we rejected. Pretty strong move. So check this out, right? If we create a fib from the high of this swing down to the low, we retrace exactly to 50% for having a small reaction down. Anticipate us coming back down to clean up some of this imbalance before continuing back up. Now, interestingly enough, we're going to get rid of this. So we also see this 70 line. So let's just make a little note of that 70% line. Okay. So returning to the golden pocket of the previous swing. All right. And we hit exactly 50% of the retracement, which interestingly enough is also about 50% of this candle, but that's neither here nor there. All right, so we return to this zone to where we anticipate us returning to, but do we actually get up into the middle of it? Now, if we go back to the 1 minute chart, we're going to see that we should retrace a little deeper into this imbalance. So depending on what type of chart you're looking at, the time frame, everything's going to look a little different. So you just never know, right? But 50% is about right there. And there is some evidence that price has rejected in both directions from that area. Now we're seeing that retracement to return to this imbalance right here. Okay, right there. And if we take this swing, we could retrace all the way back to the entry. But it's more likely that we reject from this first imbalance and continue up higher. So imbalance, fair value gap, I said it. Inefficiency, they're all pretty much the same shit, okay? You can make up whatever language you want as long as you understand what you're looking at. You can use whatever language that you define the activity that's occurring using that language. I choose to use inefficiency most of the time. And when I say imbalance, it's referring to a buying or selling imbalance where this one is like, let's just kind of take a look at these. They're not all equal, right? This is strong because there's lots of volume, super, super strong volume for 3 candles, nothing like it. The last candle to match, nothing matches this. So let's look at the whole evening session. What's interesting is this is one of the widest, fattest candles of all. This one appears pretty fat, right? Which is also in line with the 50%. So ironically enough, 50% of this 1 minute body of a candle is right at 30% of this selling imbalance. So when you see that, once we return to it, sellers are likely to step in again. It's kind of how we look at it. So this first candle, or this last candle of this down move here, had lots of volume associated with it, but then it just stopped and paused before moving and stepping down lower, stopped and paused, moved, stepped down lower, stopped and paused. Now we're making our way back up. So we are above the VWAP, we're above the point of control. We bounced off and cleaned up some low volume nodes. We have lots of buying pressure. We rejected off of the value area high and we are still above it. So getting rid of a lot of these lines because we don't need them anymore. Because it's clear what they are. All right, so let's play around a little bit with a higher time frame profile chart. So I'm going to pull up another chart here. This is going to be a 3-month by tick data NQ chart, daily profiles. That's ETH. We're going to go RTH, retail. So 1, 2, 3, 4. 4 up days, 1 down day before gapping up and creating 2 more up days. Now, I marked some levels before. I would say 25,400 if we want to make it a round number. But let's look at what 25,400 represents. So put it on 25,400. Then we'll kind of look down the line and at least close to it. 25,98. That's close enough. All right. So here's what we have. Value area low. Bounced off of it. Came back down. Broke through it. Bounced off of it. Came above it. Bounced off of it. Came below it. Above it. Bounced off of it. Bounced off of it. Below it. Now we're returning. So I don't, to me, it's not even beyond reason that we return to 25,400 and we could even return to 25,700, 25,650. There's a couple point of controls here, a low volume node here, and then some highs. What is that? 25,687. Maybe something like that. We could come all the way up there. All right. It's not outside of the realm of possibilities. And here, let's make that price level a little bit more visible here too. So we'll turn it orange, make it a little bit bigger, and then turn it into dots. Now we can kind of see where price is. I drew this line a long time ago. Right, so we broke through it and then rejected off of it because we returned to this value area high of this previous platform that we, or excuse me, previous profile that we haven't seen. Since the 10th of March. We got this long extension up and down. So this is a big ass day. Like this day right here, that was a 740 point range for the day. So on one contract, that's $1,400 times 100 contract. That's $140,000. So what we need to really look at is what is happening, right? We're extending high, right? We still haven't broken any significant highs. All right, like if we think of these as swing highs and swing lows, the next significant swing high, that swing low that I see, honestly, guess this was a significant high right here, but I don't know. This range of value right here is pretty strong. Look, we have lots of orange right in this range right here. Just lots of orange. We're kind of at 50% of that right now. That kind of falls all the way back here too. Right? Just most of that range right there is just value building in orange. So, do we really go too much higher? I don't know. Tonight, I really don't know. Kind of feel like we're just going to range. Actually, let's go to ETH again now. See how that differs. Okay, so yeah, so nighttime session, you can see that we're building value again in that area, and we're starting to push through it. So maybe we test just 25,400. I'm really liking that 25,400 level. So we tapped into this second imbalance after cleaning up and repairing the first imbalance. Oh, where was our last big fat volume candle above where we currently are? So this level, that was a big fat red candle, and we bounced right off of that. Isn't that crazy? Where lots of sellers stepped in, they're basically protecting that level. That's insane. Maybe we start to push back down. I missed my profit by a couple ticks, so we are a little bit off. But we did retrace right to the middle. Man, I know better. So look at this. This is another really interesting, right? We take the from the body to the body there, we bounce exactly off the middle of that. It's not perfect, but just these fucking clues, they're like everywhere. Right off the middle of this right here. So we're basically bouncing off two inefficiencies to both sides of the market. So what that kind of tells me is that we're likely to be stuck in a range, if I had to like make a prediction, between where this downward selling inefficiency started to where this upward inefficiency started. So I can reduce my risk a little bit here. And we retraced 70% of the swing move down from this asymmetry. Now that's not technically the entire swing. Let's say it's from there. This was a pretty isolated single swing here. So maybe we do come all the way up to the 70, right? So many maybe, if, etc. But I could have, hindsight, this is definitely something that I see often. Question is, who has more power to hold price above this buying imbalance and inefficiency and the selling inefficiency? Man, I missed most of the trading today, but it's probably a good thing. Made a few $100 in these evaluations, but nothing major. So we still have buyers stepping in. Another thing I like to do is take a volume profile and we can kind of see where the volume is. All right, so we had buying volume here, buying volume here. All right, so there's definitely in this past swing a lot more buying volume than selling, at least aggressive buying versus aggressive selling. But we also see these candles that are thicker and wider than all of the rest of these candles inside, regardless of color, which just tells us there's a lot of volume there. So there was effort and it was aggressive, and there was volume behind the aggressive effort. I think we got rejected hard in the selling asymmetry where we did expect sellers to step in. But if we can break back above this level, we could actually see price come all the way back to where we talked about earlier, 25,299. I'm just not looking to hold a position that long. And taking smaller chunks has been far more effective for me. So based off what I see, there's really no reason to get out of this trade right now. So there was a responsive selling effort back down. Didn't have a lot of volume behind it, but we can see clearly that buyers aggressive buying is outweighing aggressive selling because we have green delta, because of the green colored candles, and we can see that they're a little bit thicker than the red candles. Doesn't always mean what it looks like it means. It could also be lots of passive sellers just absorbing the buyers. But regardless of whether it's passive or aggressive, the candle will be thicker when there's more effort associated with that candle. So the most important thing is to have volume along with aggressive initiative to push price into a direction. We can see like right here, there was some aggressive selling. And this is actually the value area low. This is where buyers stepped in to attempt to push the price back up. Now we're kind of ranging in a new value area, at least for this swing, right? But if we move that back, and also include the drive down, we can really see where sellers or buyers got absorbed pretty heavy here. So there is selling pressure here. But I think because we have all these aggressive buyers that are protecting their position back here from yesterday, as well as the New York session. I guess this is tonight here. And this is yesterday's New York session. So you got all of this green, 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 large orders, green, 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 all of this area that's being protected with very little red. So to me, until I see a lot of more of these purple large bubbles or lots of aggressive volume heavy candles, I'm more likely to lean into long positions. Now back to our 40 range. So clearly, this is the highest down candle, both for volume and I think length as well. And we're kind of right in it right now. Had sellers get absorbed. We're retesting it. Sellers are trying to push back through, getting absorbed. Buyers push the price back up. Sellers step back in. We're attempting to push the price back up again. So we're kind of going into a little area of multiple mitigations through the same price levels from 25,284 down to 25,274. So it's a 10-point range. Price is still stepping up, at least momentum wise. So we did clean the low, clean the high, come back halfway, then fly. Kind of feel like we made a high, then we made a low. Then we clean the high, then we clean the low. Or you could look at it this way. We made a high, right? A new high. Then we made a low. Or you could say we made a low, and then we made a high. Then we cleaned the low, then we cleaned the high, then we came back halfway, let it fly, and maybe we retest this level right here. So lots of options, lots of possibilities. What is the most likely? No fucking idea, man. You can just go off your experience, go off the technicals, look at the evidence that's in front of you, and then make the best decision possible with limited information. Basically inaccurate assumptions with some data behind it, which gives you confidence. And then the most important thing is just managing your risk. It's far more important than being right in a trade. I'm going to be straight with you. I've taken thousands and thousands and thousands of trades in a simulated environment. And my win rate is very high. But here's the problem. When I lose really big. when I win really small. So we're trying to change that. So see, we're targeting 78, risking 43. We can be right less than. What's really funny here, right? This is the 40 range chart. If I was to put a stop here, it should likely be behind a protected area. Now it's more like a 1-to-1, actually less than. Now what's interesting, what we see on this 40 range chart is not the same imbalance that we see on the 1 minute chart, right? So it doesn't matter which chart you trade off of. The most important thing is that you have you're trading on the same chart all of the time. Okay, because you're gonna understand how price moves better on that time frame. So I mean you can't look at other time frames like what I'm doing here. 40 range is a little bit not 1 minute candles. Sometimes it takes 5 minutes to create a candle. Like this one was created at, so let's say 0.5. The next one is 0.24. Next one is 0.41. Next one is 1 o'clock. Next one is 1:02. So they're not time based, they're volume based candles, tick based. So lots more overlap. But you can see clearly that regardless, we came back and tapped in once we left this area. Doesn't really look like that huge of a buying imbalance on this chart because price went up, it retraced back. Then it went up higher and it retraced back. Then it went up higher and retraced back. Sure, there's some areas that hadn't been mitigated yet, and that's why we retraced back to clean them up. And it usually tries to clean up the next important one. All right, so what do we see here? See, on 40 range, we don't have these minute by minutes, right? This one is 115, this one's 129. This is like a 15-minute candle right here. It took 15 minutes for price to move 40 ticks, which is 10 points. So 129, 115. 102. 1 o'clock. This one moved fast. 41. So that's like 20 minutes here. So this is a 20-minute to move 10 points. Right, and mind you, this is NASDAQ, so and we are trying to break back into the value area for the overnight. Clearly not out of the water here. You can easily get stopped out. So what I did was I put my protection behind this volume, right? And then we also see this buyer stepped in here too. So technically, yeah, you can keep moving it forever, right? That's probably the safest stop. There's also a low volume node there. So then you're like, okay, well, even safer, I can put it behind these aggressive buyers. So like, and all these aggressive buyers over here, we can put it below that level. You can just keep going and keep going, right? Forever. So what are you willing to risk? Well, if we break through this level, we're going to potentially retest the point of control and the VWAP, session VWAP. we have these multiple mitigation area here and here. We're likely to tap back into this level right here. Right, and here's what's interesting, right? So, like I said, you can just keep moving it back and keep moving it back. So we put it all the way to 198, right? So we're at 75, and now, like, oh, I can put it behind this. So, like, you can do that shit all day long, right? Um, Coming back to the 1 minute, it looks a little different. Came down, wicked to the bottom of the value area for the entire, actually not for the entire session, but for this swing, right? And we're right at the entry. So we're doing the multiple mitigations. So we have this zone. I'm gonna recalibrate this zone here. So let's move it a little bit. Kind of weird. Let's get rid of it. Okay, so multiple mitigations. That's when price basically barcodes. All right, so there's no right or wrong on this, but this low volume node here. All right, then we're going to take here to here. So this zone right here, this high to this low, this high to this low. All right, so I kind of cross-referenced them. What we can see is we broke through the zone, ripped back up, came back in, tapped into it, tapped deeper into it before breaking through it. Then tapped back into it in the opposite direction, tapped a little bit deeper, broke through it. Then tapped back into it, tapped a little bit deeper, broke through it, tapped back into it, tapped back into it a little higher, and again, multiple mitigations. And then we're about to break back through it to the upside. So those areas happen a lot. So you can find them everywhere. Whoa, what the fuck? All right, so let's get rid of um let's get rid of some shit. Just to kind of make it a little bit easier to read. Just get rid of some shit. We don't need it. We'll keep that line there. And we'll get rid of these. That's all we need right there. $18.5 points. 17.75 points. 19.5 points. 19.25 points. 16 points. $20.5 points. So I'm gonna mark this inefficiency right here. All right, which we've yet to clean, and we'll make it a different color. And then we're gonna come back to the 40 range chart. So we'll make it blue. Now let's change this to 40 range, or we can go 20 range. Okay. So it's here as well. Okay, so on we do see the asymmetry on a 20 range. Okay, if I go back to 40, it's not there. All right, it's a multiple mitigation. So that tells me that I can't be looking at the movement if I'm scalping and taking these small trades on this higher time frame because I can't see what's going on. Let's see what we can push though. Let's go 32. So 32 range. Um, so on the 32 range, we do see the imbalance. Okay, um, so down, up, down, tap back into it, and then move away from it. So we see it, it's here, and we did tap into the first area of imbalance inefficiency when price moved down. The second area, excuse me. You count the second, the two, you got three candles here. We got a lot of movement after the third. So price moved 64 ticks. Actually, not even because it started right here. Moved like 11 ticks and then just kind of took off. So you can kind of see that we're just consolidating here. So I think 32 is a little bit too high too. It's not as clear where the inefficiencies are. So let's move it down to 28. We're going to make it as big as we can. So 28 doesn't look much different than 32. I think 20 is better. I really think let's try 21. And then it's far more clear. All right, so here, from there to here is one. And then we still have Control C is not copy. It opens up select instrument. That's kind of dumb. All right, and the second one is right. Essentially, right now it's right here and right there. So pick your poison. Back to a 1 minute. It's much clearer up here. So far, as advertised, but the interesting thing that I see is that we came back and cleared out on the 1 minute this entire imbalance, inefficiency gap before returning up to retrace. But we are making lower highs, but we're also making equal lows. The third tap into. So we tapped off of it, rejected, came above it, tapped off of it, moved up, came back to it, tapped off, retraced down, came back to it, tapped off, retraced back up. So like, yeah, man, you just gotta gotta do your best because anything's possible. I'm getting tired though, so I might get out of this trade and just call it a night because it's taking a lot longer. And I do think we're just gonna kind of range between here. Right now, it looks like we have more momentum to the downside here. And I really don't want to take on that much risk. So I would say that this big wick right here, I'm not really going to count that. It's the high. This looks more like one touch, two touch, three touch, four touch. Maybe it's time to break through. We've touched that line like fucking a lot of times. Um, but it's hard to say because it looks like the trajectory is getting steeper, right? So, all right, y'all. If anybody's actually here, you can see that we just are making a move back down to the VWAP here. And we just tap back into that area that I have marked. And let's see what happens. Might just chalk this up to an L because my ass wants to go to bed. It's like midnight. I don't think I'm going to make it until the London Open. We're going to give this a minute. So I was saying that this is the bottom of the range for now, right? Obviously, we have kind of a double distribution and kind of a gap here in the middle. So this area does need to get repaired. I wouldn't be opposed to taking a long if I wasn't in a position already. From the point of control of the VWAP back up to the value area high. That would be a nice 20-point scalp. All right, so remember how I was talking about 18 to 21 points. So this swing down is actually 36 points. So this is interesting. This swing is a little bit bigger. And then if we count this swing, it's about 26 points. And my intuition was pretty good about us looking like we were going to return down to the VWAP. All right, let's look at volume, right? We did have some volume step in right here. Okay, so we had a little bit of volume step in right here. So creating another little inefficiency. So now we have multiple legs of inefficiencies to the downside that have yet to be revisited or repaired, if you want to think of it that way. And to the downside, we tapped into the inefficiency down here. Small little zone there. You can see we tapped right into it, right? Cleaned it up before rejecting pretty hard off of it, creating this doji. It's a 1 minute, so it's not super strong, but I did anticipate us ranging in this zone. That was my overall analysis, was that we would be in this zone where we're building value. And we have a shelf down here. I could see us retesting, cleaning this up, and then rejecting off the point of control back up, cleaning up and repairing what's left of these inefficiencies down here. Unlikely to come all the way back to clean up these inefficiencies under the point of control. The thing that also kind of gave me the thought and the anticipation that price was going to move its way back down was the fact that the point of control is lower in the overnight session than it was during the New York session, although price right now is still above the point of control. So what I would like to see is the point of control migrate up to give me a sense that price is going to also migrate up to new levels. Completely possible that we continue down as well. Starting to see the channel down. It's pretty strong reaction. Now we're creating a inefficiency back up to clear out the previous efficiency. So this is like an inverted, right? We're taking inverted gap trade through and back up to the top. Maybe trying to revisit up here, right? That would be best case scenario. Worst case scenario is that we drop down, retest the point of control. But man, we have lots of buying pressure down here. This is a pretty strong level. We've already retested it once, bounced off of it, retested it twice, bounced off of it. It's a low volume node. There's a little shelf there. And yeah, it's fucking, wish it was easy. I damn sure thought it was easier than it is. I thought that I'd be making money 3 months in. I'm like 15 months in, and I'm just to the point where I'm nearing payout status in the prop firms, where I can consistently pass evaluations now, essentially, is where I'm at. So it's a good place to be, making progress. Like, Only time I really fail evals right now is when I'm oversizing and just trading too big and taking $200 losses instead of $50 like losses. So now we're retesting that level, right? Just as said before, we came back, cleared up half of that asymmetry, tapped right into 50% of it in inefficiency, and then rejected from it. Now we're reaching this line where we had buyers step in previously, and it's a low volume node. And see if we get a nice buying reaction, hopefully responsive, limit buyers step in and absorb any selling orders that try to push the price below this level. So I really should have been out of this trade, but I trust my analysis to the point that I'm happy to take on a little bit more risk because I have confidence that with all of that bullish, aggressive buying that happened earlier in the evening, those same buyers are going to step back in and protect those levels, especially here at the VWAP. They're going to reload. Maybe allow it to drop below the VWAP onto this area. If not, rejecting exactly where we already rejected from before returning back up to at least test the trend line and hopefully break through it back up to the other side, making our way up to 25,300 to retest the Asia high. So we're going to give it 10 minutes. Then my ass is going to bed. I may leave the trade on and running if we run out of time. If it stops me out, so be it. So this is an eval. I'm gonna pull up just so y'all can see. Didn't really talk about it too much, but I'm gonna pull up the portfolio and failed eval. So these are a little bit older. Failed eval, even though I'm above 50,000, I just oversized and I hit my max daily loss limit. Same thing with this account. Same thing with this account. Okay, problem here is I'm above the threshold, but I made too much money in one day. So now I actually have to get to 55,000 to pass this eval. So this is the only Legends eval that I have active. Another fail. So these are all failures. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 out of 12 failures. Actually, 13, 14. That's not good, right? So these are older, and this is the only one I have active right now. Now, going over to Apex, this is my main. Failed this eval, sized up too big. Same thing here. I was $70 from payout, or not payout, and I blew it. Same thing here. I lost my max daily limit. So these are all failure, failure, failure. This one right here, I'm halfway to profit target. And these last three are performance accounts. Performance account 1 is a 50K. It's number 4, but halfway. I think I need to get to 600 plus 53,000. So I'm almost halfway. Over here, I'm up 1,000 on this other performance account, and this is a 300,000 where I took it to 320,000 in the eval without drawing down 7,500, and now I'm at 301,500, so 1,500, and I need to take this to 7,500, but basically 8,100 to get my first payout. And these are the old Apex rules, these three, and this eval is on the new Apex rules. Actually, not this eval, but this one right here, 24. All these are failures. Failure, 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 failure. And it's all due to sizing up too high. Too much size. Gambling, essentially. So all these losses were just poor risk management. I vowed not to do that on my performance accounts. I'll still kind of donk off on my evals once in a while, but the goal is to just try to get to a point where I'm not donking anything off ever. Okay, so it looks like we're in the zone. We did get a strong reaction down here at the bottom. Could just be a pullback into this asymmetry imbalance. We still haven't cleaned up this entire imbalance, and we still need to return up here to clear out this entire imbalance, as well as up here at the top into this poor high wick where price just rejected from. Okay, so now we are at the VWAP as well. We're also at this level that I deem really important to hold. We're cleaning out this previous Can I get rid of this line? Down here we have this asymmetry imbalance. We're repairing it. So I'd say that's kind of my drop deadline right here. So we got, fuck, has that already been 10 minutes? 5 more minutes, we'll give it. Oh, fading fast. So now we tapped into that level. Technically, if we really look at this, you can see that this is also a very high aggressive buying level at the point of control. So lots of buyers step in this zone right here. So we have to hold this zone. If we don't hold this zone, what I think is going to happen is price is going to likely return back down to test the bottom. Truth be told, we could clean this up as well, but I'm not willing to take that chance. So my stop is going to be at 199. We're not going to lose more than 200 on this trade. Can always re-enter and try again. But buyers should step back in around here. Just everything to me says that we're going to get a bounce here. But obviously, I was wrong with this trade. So, again, that's why you should never listen to what I'm saying, ever. So, yeah, we're returning back to the point of control. Again, this was the level where we had lots of buying, aggressive buying, one of the highest nodes. But we also have another node right here. So if I get stopped out, I might even put the order in now. My next limit buy order is going to be right in front of that zone with the stop loss below, because this is also a asymmetry that hasn't been cleaned up yet in the session. So this was created on the drive up. Highly likely that we return at some point in the overnight session down to this level before working our way back up in the opposite direction. That's why trading's hard. You can see whatever you want to see. So basically, we're using this shelf as protection. We can even save some money here. This one we're going to risk. We'll be sleeping when that happens, though. Risk 96 to make 408. Technically, man, I want to take it all the way up here, but we're going to take it at the imbalance. So 400, 100 to make 400, 4 to 1. And we'll be sleeping. All right, so looks like we're in trouble on this trade. We've capped out our losses at 180.50, so that puts us down about 120 on the day. For this account, we're up 96 in our Apex account tonight. 92. No trades going. So I think I like that trade for this account as well. So we're going to limit by 3 That's a sell. Shit. 3 contracts right above that line with a stop loss below 88 with a take profit at around 400. Be right there. I think we want to come into this asymmetry here. We could still get a reaction here as well. So I think we got stopped out. We did. Oh no. Yes, we got stopped out. So we broke through. These buyers are no longer here, at least for the moment. I do think we'll see them again down here at the bottom. So we might get that entry before I go to bed. So let's go ahead and let's just see. That's moving pretty fast. It's a pretty strong move down. The interesting thing about it though is, well, there's some volume behind it. All right, there's some volume. Like here's some volume, here's some volume. Here there's a little bit of volume. So I mean, there's aggression there. There's a move. Now down here, this seems like the most logical area. I like it. All right, y'all. So I've set up the next trade. Give it a little room here. It's more than a 2-to-1. Could tap back into the bottom, but I think more likely it's gonna reject up here somewhere. So give it a little bit of room. 171 to win 400. It's 2-to-1. Only have to be right 1 out of 3 times. And we're gonna call it. So I'm gonna head to bed. We'll see how this works out. Good luck for y'all that are trading, and peace out, y'all.